So we have seen what will be taxed in the hands of non-residents. Let's see what will be taxed in the hands of non-residents. Non-residents, as I mentioned, they are the companies which are incorporated outside UAE, but they have a business in UAE directly or indirectly or whatever it is. So if they have any income which is sourced in UAE, the non-residents have income sourced in UAE that is not attributable to any permanent establishment, then it will be still subject to tax. So we'll talk what is permanent establishment and all, as I mentioned. But in the hands of non-residents, if they source any income from UAE, so that will be subject to tax. So what is called as an income which is sourced from UAE? Any income that is derived from a resident person in UAE by this non-resident person, that will be subject to tax. Or the non-resident company is paying or earning some income from another non-resident person, but that is in connection with a permanent establishment in UAE. So non-resident companies or persons are actually doing the business or transaction, but that is actually in relation to our permanent establishment in UAE. Then that particular transaction also will be called as UAE source income in the hands of non-resident, and that will be subject to tax in UAE. Other forms of UAE source income are like, if non-resident is performing any activity in UAE, or non-resident has got an asset which is located in UAE and they are generating income out of that, or they're getting income out of any capital investments made in UAE by a non-resident, or non-resident has got any right in UAE out of which he is generating any income, or any other services performed in UAE out of which he is getting the income. So the profit out of that particular or that income will be taxed in UAE under UAE corporate tax laws in the hands of non-resident. The second category is income attributable to permanent establishment of NR in UAE. So any income that is specific to or in relation to the permanent establishment owned by the non-resident will also be subject to tax in UAE. Third category is income attributable to any nexus of non-resident in UAE also is going to be subject to tax. What is nexus? The definition is not mentioned by the ministry in decree law yet. So we'll have to wait and see what it is going to be. So in the hands of non-residents, all these will be subject to tax in UAE. If this non-resident, if they have any permanent establishment in UAE, so they'll be subject to tax in UAE, as I mentioned earlier. If they don't have any permanent establishment in UAE, so it may not be subject to tax in UAE. So as I mentioned in the initial slides, any particular country, they can only levy tax, or they will get the right to levy the tax only on the businesses that are established or businesses that are conducted in UAE, or if the foreign persons have any permanent establishment in UAE or in a particular country, that's when they'll get this right to levy tax on them. So when they go for the taxation of the income of non-residents, they also need to look at, or one should look at, the treaties that are being generally entered by UAE with the other countries. There are various treaties that have been entered by UAE with other countries with respect to the taxation of this cross-border transactions of businesses. So if there's any specific rule which is in contradiction to the rule mentioned in the decree law of UAE, then the rule mentioned in the treaty will prevail. Means that rule should be applied, not the UAE law mentioned with respect to cross-border transactions. So here what I was trying to say is that any income that is attributable to a permanent establishment of a non-resident will be subject to tax in UAE. So let's look at when or how a non-resident will be called as having permanent establishment in UAE. They're actually incorporated outside UAE, but they have some form of business being conducted through some channels. So the rule one or the test one is that the non-resident person has a fixed or permanent place in UAE. They are not registered in UAE, but they have a fixed or a permanent place in UAE through which they are conducting some business activities. So if they have that, then that non-resident will be considered as having permanent establishment in UAE, and then the tax, therefore the tax will be levied on that particular business income. Rule number two is non-resident person has and habitually exercises an authority through another person. They don't have any fixed or permanent place here, but they have someone, the natural person, who is actually taking decisions on behalf of non-resident, which means through that particular person they are conducting business. Then also the non-resident will be considered as having permanent establishment in UAE, therefore it will be subject to tax. Third test is non-resident person as any other form of nexus. As I mentioned, nexus definition should come out from Ministry of Finance. So if they have this also, then it will be subject to tax anyway. So let's quickly look at what will be considered as having place of business, a fixed place of business for non-resident person. If they have any place where they take decisions, management is actually sitting in a resident or somewhere and they are taking decisions with respect to business of a non-resident. Non-resident person has got a branch in UAE, then it will be called as permanent establishment for them. Any factory, if they have any office, including a temporary or field office or an employee's home office, the business is actually conducted from an employee of a non-resident person in UAE. Then that particular office or resident of an employee will be considered as a permanent establishment for non-resident, and any income generated out of this particular activity will be subject to tax in UAE. If the non-resident has any workshop or land, buildings or other real estate properties, if they have in UAE, these are also considered as permanent establishments for non-residents. Installations and structures used in the exploration of natural resources, they will be subject to tax. If non-resident has or own any mine or oil or gas wells or acquire quarry, then they will be considered as permanent establishments for non-residents. Any income generated from them will be subject to tax in UAE, though they are not registered in UAE. If they own any building or construction site or place of assembly, and activities have been conducted from that particular place for a minimum of 6 months or more, then any income generated from that particular place will be subject to tax in UAE for non-residents. On the other hand, non-residents, if they are conducting any preparatory or auxiliary activities, it's not their core business, but that particular non-resident person is only conducting some preparatory or auxiliary activities from that particular fixed establishment, then it will not be considered as a permanent establishment for them. So then it will not be subject to tax in UAE. So what are the preparatory or ancillary characteristics? Like, if non-resident conducts any limited marketing or promotional activities, or they perform any market research just to understand whether it is going to be feasible to do business in UAE for my activity or not. For example, EFCO, which is situated in USA, they want to conduct a survey in UAE through a fixed place of business. Someone, maybe they engage someone or they are asking their employee to go here to UAE and see whether is it going to be feasible to conduct any business in UAE for our activities or not. So if that is the activity conducted through this permanent fixed place of business in UAE by non-resident, then it will not be considered as P, and the income generated out of that will not be subject to corporate tax. Likewise, attending seminars or conventions by non-resident employees are not considered as Ps. If they store any goods in UAE or display any goods, the non-resident does not have any place here of business, but they only display in some company or some showroom of their products. Then it will not be considered as PE, and so other activities. Let's quickly run through an example. Let's say there is a company in UAE and that has got a branch in Singapore. And this Singapore branch is conducting full activities related to this UAE company business. Okay. Since Singapore branch is conducting activities, so Singapore will have the right to levy tax on the income of Singapore branch. But since it is a branch of UAE company, so UAE government also will have the right to levy tax on the branch income. Okay, so this is a scenario. So you are paying tax on your branch in Singapore itself. And in UAE also, you will be subject to tax for the branch profit in UAE. Okay, so these are the rules. Now, you may have a question saying that you are paying tax in Singapore as well as in UAE. So is it not going to be subject to tax twice. So for which there is a concept called foreign tax credit, which we will see in the future slides. So you will be allowed to take a credit of tax paid in Singapore already, and then pay net amount of tax only in UAE for you to UAE government. Of course, there are certain conditions to be met, but this is how the double taxation effect will be removed. So as I mentioned, the permanent establishment can also be determined by a second rule of agent test. The non-resident, they do not have any permanent establishment or fixed place of business in UAE, but they are conducting through an agent who is fully dependent on them. Then also the non-resident will be considered as having place of establishment in UAE, and they will be subject to tax in UAE. Of course, if they are conducting the business through an independent agent who is not directly connected to them, then it will not be considered as having PE in UAE, and hence they will not be subject to tax in this model. How to determine whether a particular agent is considered as independent or dependent? So these are the conditions that we need to look at to determine whether an agent is a dependent person or a dependent agent or not an independent agent. Let's look at an example. FCO company, a foreign company based in USA, is engaged in investments in real estate activities in various countries. So F company engaged a real estate agent called S Real LLC in UAE to assist them in identifying the investment opportunities in real estate in UAE. So they want to get into UAE market. So they have engaged one real estate broker or agent to suggest them if there are any potential investment opportunities. And this S Real Estate, which is a real estate broker or agent, they also generally provide services to other clients. On top of it, that S Real LLC charges its commission on the services provided to the clients at market rate. So they don't manipulate the commission. They just have their own standard commission rates, and they charge according to that rate. So to anyone, whoever is taking their services. Now, in this case, we need to determine whether this S Real LLC, which is a real estate agent, is it considered as a dependent agent for FCO or not, because they are providing some services. But there are a couple of indicators given in the example that S Real Estate company also provides to other companies, services to other companies. So this S Real LLC is not fully dependent on FCO, and the S Real LLC is also charging their commission at market rate. So this gives an indication that this is an agent which is not acting as a dependent agent for FCO. Hence, this S Real LLC will be considered as independent agent for FCO. Therefore, FCO is not considered as having PE in UAE. Okay. So let's quickly look at the takeaways out of the slides that we went through so far. What do you have to do? What is that you have to look at it now? These are the few key takeaways that I would summarize. Now, check if the financial year followed by your company is according to the legal documents. Some of the companies, without knowing, they may have April to March as their financial year mentioned in their incorporation documents, but they are actually following January to December. So this becomes a conflict. So you need to look at the incorporation documents and make sure that the financial year what you're following is as per the legal documents of the company. So these are the things that were not so important so far, but now we have to look at them. In certain cases, the memorandum or other legal incorporations, they don't specify any particular financial year in that. But there is a rule saying that the financial year shall be determined by the company or by the board of directors through a resolution. So if that is the case, then we have to have a document in place mentioning the financial year, what is that you are proposing, and have that in place. Otherwise, there will be a question later on if you're not having enough documentation to support your financial year dates. Also check if you are part of a group and if any business has a potential to be considered as exempt person, then you have to apply for the FTA to consider them. So this is something that you need to look at now. Also review the legal structure of the businesses and the location from where they are operating, how and where the business is actually being done, to be able to see how the corporate tax will impact their business. So the legal structure and the locations and the business arrangements, all these things, they have to look at it now. Since we have seen the taxable persons, non-taxable persons, and so forth. So you need to now look at the structure and make sure that it is in favor of the business. Check if any of your outside UAE entities or businesses could fall under taxable persons. You may think so far that since the business is outside UAE, so it may not be taxable in UAE. But now you need to relook at that and see whether it is really so that it is not subject to tax in UAE. If you have any foreign branch, then you need to look at the decision that you have to make, whether you want to consider that the foreign branch as part of your UAE entity, or do you want to exclude that in full, and then therefore that will not be subject to tax in UAE. So that's what. So these are the few things, a few areas that you need to look at out of the slides that we have discussed so far from the point of view of implementation and planning.